Hi there. Welcome to the Credit Union Evangelist channel. And I am yours truly, Mark Brantley, the Credit Union Evangelist. And I am glad that you are taking the time out of your busy schedule to tune in while we are spreading the good news about CUs. In other words, we are spreading the good news about credit unions. And we have a topic that I think would be beneficial for you to know because it affects a great number of Americans, especially those of modest means, those that are living paycheck to paycheck, those that are having difficulty making ends meet. And I can talk from that perspective because there was a time where I was struggling paycheck to paycheck, trying to make ends meet. But thankfully, I was introduced to a credit union, and because of the opportunities and the various financial products that credit unions offer, I was able to elevate my socioeconomic status so that I would be able to rise above the day-to-day grind of trying to meet obligations, trying to pay bills. And I just want to share with you what credit unions offer, because I know a lot of you are going to payday lenders, especially if you're tuning into this and you saw the title. You are likely going to a payday lender. And what I hope this video would do is show you an alternative means by which you can break the cycle of a payday lender. Well, first, why don't we go into just briefly explaining what a payday loan is. Well, first of all, it's a short-term loan, and typically borrowers, they take out these short-term loans because of an emergency that may arise, or it just may be that their expenses are more than their income is at that particular time. So therefore, you need a bridge in order to cover the unexpected or unanticipated expense, or just things are not going the way you want them to go. You may have lost your job. You may have gotten a pay cut, or your overtime may have ended, and now you're finding yourself short. And that's why you have borrowers that typically turn to payday lenders. The only problem is that these short-term loans usually and mostly have high rates of interest. And what that does, it creates a debt cycle trap, because you are leveraging, or you're posting as sort of collateral, your paycheck that you earn, whether it's weekly or bi-weekly, and you're pledging it against the loan that you're borrowing. And until that loan is paid, interest continues to add up and accrue. And usually, because you are borrowing against your paycheck, that interest is typically what you're paying for, because remember, you're struggling to pay other expenses. So now you're incurring another high interest payment on the payday loan, and that is putting you further in the hole. And because the rate of interest is very high, it seems as though there's a never-ending cycle, and the interest just mounds up. You then go to another payday lender, and then you find yourself in the hole with that payday lender. You then try to get a credit card, or if you have one, you're maxing it out. And it's just not a quality of life. Payday lenders are really, and I'm not trying to defame anyone, but if you really analyze it, payday lending is like modern day loan sharking. The only difference is that loan sharking is illegal and payday lending is legal. But nevertheless, when you would borrow from a loan shark, it is also a debt cycle trap, because what you have to pay is typically either 2 or 3 times more than the actual loan that was given to you. And when you add up the interest with regard to the payday lender, you are also paying that back, similar to the amount that you are paying the loan shark. The only difference, as I mentioned, is one is illegal and the other is legal. So the question then is, why subject yourself to this unending debt cycle trap? Well, I'm here to tell you that credit unions could be the one that comes to your rescue. As a matter of fact, credit unions now have what is called a Payday Alternative Loan, a PAL. In other words, credit unions want to be your pile. They want to be your payday alternative lender. So why don't you do that? Why don't you allow a credit union to be your pal? Because a pal will not take advantage of you. A pal will not create usury and will not trap you into a never-ending cycle of debt. Now, a PAL or Payday Alternative Loan is a short-term loan as well, but typically the interest rates are very low. Also, the fees that are involved in establishing the short-term loan with a credit union are typically low as well. Why? Because once you join the credit union that makes you eligible to receive the PAL, you are not a customer. You are a member owner of the credit union. And that's one of the big differences. You see, payday lenders are typically corporate entities that have stockholders that they have to make sure that those shares owned by the stockholders are earning dividends. But when it comes to credit unions, the members are the owners of the cooperative. So in essence, the credit union cares about your well-being. Because as you thrive, so does the credit union thrive. As a matter of fact, the credit union is not for profit because the earnings that are obtained through the normal operations of doing business, those are sometimes returned back to the members in the way of special bonus dividends. Or they are retained, and they are retained for the purpose of creating affordable loan products which are lower in interest, like the PAL loans. And that's one of the benefits of being part of a credit union, because the profits are retained. It's not the primary purpose, although credit unions are in business to make money. It's a business enterprise, but the primary purpose is serving the members. As a matter of fact, the credit union motto is not for profit, not for charity, but for service. And the credit union ethos or philosophy is people helping people. Don't you know credit unions were created as a reaction to people of modest means being taken advantage of? As a matter of fact, as a former board member and former chairman of a multi-billion-dollar credit union in New York City some years ago, that particular credit union was created because the mayor of New York City saw that city employees were being used. They were being taken advantage of by the loan sharks. So what that mayor did was he created a board of directors, and he grew a number of city employees to pool their monies together, applied for a state charter, and therefore the credit union was born. And that credit union has existed for over 100 years, serving city, state, federal employees who work in New York City. And you might know the name of it. It's Municipal Credit Union. So it was birthed out of necessity to protect those of modest means. And you know what? You are that type of individual if you're listening to this video. Because if you're taking on a payday loan, you are a person of modest means. And there are better alternatives. And credit unions is one of the best alternatives. Get a PAL, which is a payday alternative loan. You'll find that it's low interest, it's easier to manage. If you happen to fall behind on your payments, you are able to speak to a representative that will work with you so that you are not faced with financial demise. Who wants to be stressed from week to week, knowing that your payday, or rather your paycheck, is at the mercy of a legal loan shark? So why don't you visit a credit union today? As a matter of fact, there are credit unions in every state, practically in every large city. Even in rural areas, there are credit unions. And as a matter of fact, there are credit unions that are virtual. You are able to become a member even though you may not be in their geographic or location. As a matter of fact, they are what are called open charter credit unions, and you would be eligible to join one. Once you join, you can then make an inquiry whether or not you or that credit union has a PAL loan, and then apply. Not only will you be able to make ends meet, they will probably also be able to help you consolidate and pay off that payday lending loan. And then as you begin to make payments on the PAL loans, you are now establishing credit so that you would be able to have access to other loan products, build up your credit score. Then you're able to get a car loan. You maybe even later on, once you establish good credit, to even get a mortgage. These are things that are happening at credit unions. Credit unions are the best financial institution alternative. I know you see bank commercials, but banks are for profit. Banks also take on a lot of risk. Don't you know there are less reserve requirements for banks? They don't have to have a lot of money or cash on hand for their customers. That's why sometimes if you would go to a bank and you would try to withdraw a great sum of money, there's a lot of red tape that involves, because they only have a certain amount of cash on hand because their reserve requirements is virtually zero. And that was after the year 2020, in which the Federal Reserve relaxed reserve requirements. On the other hand, credit unions are less risky. And I don't want to go into the details of this, but they have more cash on hand because their liquidity levels, which is cash on hand, to be able to meet member needs, are higher because they are regulated by a different agency. It's regulated by a federal agency like the FDIC, but it's the NCUA, the National Credit Union Administration, that is the regulator for credit unions. And the requirements require less risk because more reserves are kept in the vaults for a rainy day, because you never know when members need their money. And you want to make sure every member that comes into the credit union is able to receive their money upon request. There are other high risk behaviors that banks take that credit unions don't, but that's for another topic. And I mentioned that this video wouldn't be long because I know you have a busy schedule, but I would like you to just tune in to the Credit Union Evangelist from time to time as we post content. We will be posting different topics, credit union governance, on credit union structures. As a matter of fact, you may not even know that there are corporate credit unions, which are credit unions that serve other credit unions. We'll be talking about that and a host of other topics. So I would like you to tune in to Credit Union Evangelist. Don't forget to hit that subscribe button so that you can then get notified of the videos that come about and that are current, and then share because there are others of modest means just like you and just like me that want to know more about credit unions. All right. Appreciate your time. Credit Union Evangelist signing off, spreading the good news about CUs, or in other words, spreading the good news about credit unions. Take care of yourself. See you until next time, and God bless. Bye.